Hello and a warm welcome. You're watching India Tonight with me, Jude Sanath, joining you from our Chennai studios, even as my colleague Shibani Garat joins in from Mumbai. Now, it's a rather grim start to the bulletin, largely because, as we have been reporting and the globe has rather been fearing, West Asia is witnessing a fresh round of escalations in the ongoing crisis. In fact, the UAE has accused Iran of launching 2 ballistic missiles, and following the alleged Iranian strike, Abu Dhabi, we're told, has also put a freeze on ties with Tehran. So, Shibani, it seems like deja vu all over again. Just when the globe was heading to peace in the West Asia region, these escalations don't seem like good news, especially in the pursuit of peace in the region.
Absolutely, Jude. Now, the UAE Foreign Ministry, in fact, has announced that all trade, commercial exchanges and financial transactions with Iran have been halted until further notice, raising fear of another UAE-Iran war. Meanwhile, with Hormuz deadlock continuing, more than 80% of the vessels transit through the Strait of Hormuz over the past 2 weeks have used the Omani route. We have Sumita with more details on this.
That's right. West Asia is witnessing fresh escalation because the UAE has accused Iran of launching 2 ballistic missiles. And of course, in light of that, the UAE has suspended all trade with Iran. And remember, this is in light of the regional escalations that we have seen. But Iran, on its part, has denied firing 2 ballistic missiles that the UAE said that they were targeting the maritime navigation in the country. Remember, the UAE is one of Iran's largest commercial partners, and it ranks only second to China. So, of course, this is a major escalation, even though attacks on the UAE have been happening since the beginning of this war, since Iran started bombing or started attacking, rather, Middle Eastern countries. Meanwhile, the U.S. Secretary of State Marco Rubio has spoken with UAE's National Security Advisor Sheikh Tahnoon bin Zayed Al Nahyan to discuss key regional security issues. In fact, as far as the economic squeeze is concerned, that now seems to be, more pronounced, because the Iranian foreign minister has said that the U.S. maritime blockade of Iranian ports, that has contributed to goods shortages and price increases. And as it is, Iran was dealing with a bad economic situation earlier on as well. Now, Tehran has also lost significant control of the Strait of Hormuz, is what the data is showing. Now, with 80% of transits taking through the Omani route. And on the back of that, oil prices have been hovering near the above $90 a barrel mark because the talks between Iran and the United States, they remain at an impasse.
Well, like Sumita was explaining there, bad news for peace in the region, bad news for oil prices as well. And if markets are any indication to go by, it doesn't make for great reading as far as the exchanges are concerned as well. So to break this down for us and hopefully take us through what lies ahead in the West Asia region and its neighboring geographies, I'm joined by a panel of experts. David Roche is a strategist at Quantum Strategy. Syed Akif Zaidi also joins us. He's, of course, a researcher and a West Asia expert at the Al Mustafa International University in Iran. David, if I could start with you, give me your opening remarks, if you will. What do you make of this re-escalation of sorts in West Asia, with the UAE now definitively cutting ties with Iran over the alleged missile strike? Where is this likely to go from here?
Well, actually, I would add one little anecdotal story, which is quite interesting, which is that the Saudi Arabians have imposed increased financial regulatory scrutiny of any transactions with the UAE. So it's not only across the Gulf, between the Gulf states and Iran, they're also fighting among each other. Okay, now let me boil this down to what I actually believe. The thing that matters for the people who watch your program is money. And the thing that matters to money is whether the tankers are moving or not moving. Not only, of course, through the Straits of Hormuz, but also through the Red Sea. And I'll give you the bottom line. The tankers are not moving, and they haven't been moving. The amount of oil coming out of the Middle East, despite Donald Trump's mendacious claims that it's tens of millions of dollars of oil, tens of millions of barrels of oil a day, that's a lie. It's not. It's 5 million. Okay, if we are getting 5 million out of the Gulf, that means the world is short of between 11 and 14 million barrels a day. Now, why does that matter? It matters for 2 reasons. The first reason is that gap, that hole, is being plugged by inventories. And those inventories will reach the 30-day minimum by the middle of September in the OECD region. And of course, that puts a major squeeze on India too. The second point is that because oil is not available in the way that it used to be, the refineries are operating at much lower efficiencies globally. So if you put 100 barrels of oil into a refinery today, you get out 96 barrels in terms of refined product. So what that actually means is that when you look at the petrol market, the diesel market, and so on, the squeeze on energy is getting worse faster because the refineries are operating in an environment in which they cannot produce refined products efficiently. So anyway, to wrap it all up, we're short of oil. It's going to get worse. Prices are going to go up, probably to $125 a barrel. The US has got absolutely no answers to this. And Iran is going to remain rejoicing at the fact that it is in charge of the Gulf and is probably going to remain so.
Right, right. Since you rightly pointed out, Mr. Roche, let's first, important for the audience to know about money. Let's go over to Mr. Zaidi over here. Thank you for patiently waiting. Now, when it comes to money and bilateral trade between UAE and Iran is around $30 billion annually. How will this escalation impact the region? What will be the kind of impact with other neighbors? As Mr. Roche pointed out, the escalation and the trade deal between Saudi and Iran, which was like a conversation which was brokered by China back in 2023. Mr. Zaidi?
Bismillah ar-Rahman ar-Rahim. Thank you for having me on your show.
Yes.
Can you hear me?
Yes, yes, we can.
Okay. Okay, thank you for having me on your show. Any kind of friction between the UAE and Saudi Arabia or these other countries in the southern Persian Gulf region, while it is important to a certain degree, it is ultimately a sideshow and a footnote. The fundamental clash and confrontation is between Iran and its allies, called the Axis of Resistance, and America and its allies on the other side. So I think we should, if we need to understand what's happening and get some sense of what may happen in the future, we need to focus on the conflict between these two forces. The other the statements issued by the UAE or Saudi Arabia are of little consequence in this larger framework. As your earlier guest correctly pointed out, Iran understands that it's at a stronger, much stronger position than the USA in this conflict, and definitely at a much stronger position than where it was when this conflict was begun by an illegal attack on the 28th of February by the USA. And therefore, it understands that it has to wear down the global American empire, particularly in the West Asian region. Of course, the blockade imposed by the USA does impose a cost on Iranian society and its economy, but the Iranians understand that the cost being imposed by them on the USA and its allies economically here, my discussion is at this point only economically, is far greater. And the ability of the Iranian society, the people, and its economy, which has weathered more than almost 5 decades of Western sanctions, its ability to absorb a further punishment is several degrees higher, several times higher of this punishment. We see the US Petroleum Strategic Reserve dropping rapidly. We see gasoline prices and diesel prices at oil companies are reaping in enormous profits during this time. Anger regarding this, anger and fear and apprehension in American society is growing. We see signs of small level mutinies in the US military as well, and many other signs and symbols as well. For example, this report that you mentioned, this report which says that 80% of the ships are using the Omani route. In Iran, this has been received today with some kind of amusement, because the same report also points out that the passage, and as your earlier guest as well indicated, the number of ships passing through the Strait of Hormuz has dropped by 95% compared to pre-war levels. So of the remaining 5%, the claim now says, of the remaining 5%,
Right. I think we're having a bit of a network issue with Mr. Zaidi there, but we'll sort that out. And and get back to some very interesting insights that, in fact, he was making. But David, if I could quickly, jump back over to you for just a bit. What do you make of it? What we are hearing the Iranian side, and of course, Syed, of course, is does work at the international university, the Al Mustafa International University in Iran, is that the country is largely seeing its people and its forces develop the ability to absorb. Now, for the longest time, we've been reading this war and making sense of it as a war of attrition that has largely been, that embarked on by the Iranian side in response to, attacks by the U.S. Do you see this likely to continue? And if yes, what you've already mentioned what could well be the fallout of it in the oil front, but purely from a peace point of view, it doesn't seem like good news if the Iranian side is going to continue putting up a fight and continue this ability to absorb. David,
look, I'll be more blunt about it. The people who dominate power in Iran, are the IRGC and the hardline faction within the actual government in Tehran. And these people do not give a damn about the welfare of their people. Not at all. This leadership does not give a damn. They are in the business of a religious and a geopolitical ideology, which they will pursue even if it inflicts great hardship on their people. I don't think it is fair to say that, the crowds are in the streets massing in support of this policy. They are certainly not resisting this policy, but that may be because they're cowed. After all, young people who demonstrated on the streets are being hanged every day with sham trials to authorize this happening. And I think they're more cowed than jubilant about the policy. But you can resist economic harm, economic suffering for a very long time under a dictatorial and particularly an ideological and religious dictatorial regime. And that's what's happening. So Trump's idea that he could starve the Iranians into submission or bomb the Iranians into admission simply tell us that Trump is ignorant. Because Iran has the power to resist, but we have to understand this is not a social democracy, which is, everybody coming together to resist the nasty Americans. This is an efficient and totalitarian regime which has no regard for what its people thinks and is in a position to pursue its aims, which is the dominance of the Gulf, which it has succeeded in achieving and which it is not going to surrender.
Now, Mr. Rosh, I'm going to ask you, what will be the kind of impact on, the global shipping conglomerates, given that, now Strait of Hormuz seems to be a continuous volatile region? Mr. Rosh, yes.
Yes, I'm there. Global shipping conglomerates are, with the exception of the unfortunate crews that are both suffering and in some cases killed within the actual Gulf, the global shipping conglomerates are laughing the whole way to the bank because what this war does is to prolong all the trade routes around Africa, et cetera, et cetera. We can go into them. There are about 5 major active choke points in the world at the moment, which simply mean that these ships have to sail for longer to get to a given destination. Now, the shipping companies are actually charge people for that. So they are in a situation where capacity is tight because it's tied up on longer logistical shipping routes. And they're making higher margins because they're passing that on completely to the customers. So this is not this is a good scenario for shippers, containers in particular, tankers, and also for shipbuilders.
Right. Syed Zaidi, coming back to you, I know that you were interrupted there a little while ago when we were experiencing some technical difficulties, but I just want to talk about this alleged attack that has been at the very fulcrum of these re-escalation of hostilities in West Asia. With the UAE now closing off ties with Iran, especially after those 2 missile strikes, who stands to gain really from the aggression here? And just when there was some semblance of peace and a possible peace deal being inked, the fact that this comes up again, who's gaining out of this, and why does it prolong and continue for this long? And is there any way out, Mr. Saeed Zaidi?
I think it's a very important question, and definitely there is a way out, and the way out has been on the table for a long time, and that is America accepting the defeat that has been inflicted upon it and moving out of the West Asian region and ceasing to be the colonial power and the hegemon that disrupts and dominates this region. That's the way out, and we will get there. It may take a couple of years, but that's the way out fundamentally. Coming to this attack on the UAE, this has been denied by Iran, and this is not the first false flag attack. Over the last 6 months, we've had false flag attacks initially attributed to Iran, but then nothing came of it in Turkey, in Azerbaijan, in Diego Garcia, in Egypt, in Pakistan as well. So there have been multiple instances of false flag attacks attributed to Iran, but then nothing came of it. Iran has denied these so-called attacks on the UAE, and therefore I think the question has to be answered by whoever ultimately is discovered for being responsible for these attacks. Regarding Iran and the UAE's trade links, the trade links between these two countries are fundamentally hinge upon sanctions. How shall I say? A way to get around sanctions, because it basically, the UAE fundamentally for Iran is a transshipment point that allows sanctions to be bypassed. Of course, this happens with the UAE makes a lot of money out of it. Western powers as well are, kind of wink at it for some time. There is no fundamental economic relationship or deep economic relationship between Iran, which is a large country with a diversified economy, and Dubai, which is basically the UAE, particularly Dubai in particular, which is basically an oil producer and a transshipment entrepot. So this is not seen as a really serious matter in Iran, these statements by the UAE. Even if they stick to this matter, there are various other options. There is Oman for transshipment, there is Pakistan, and many others as well. This is fundamentally a battle or a war going on between America and between Iran to see who it is, to see whether American dominance can be maintained. American dominance, which has dominated West Asia for almost 80 years now. Can that be maintained further? Or as the signs are showing that this is drawing to an end. So I do believe this will come to an end. This will come to an end. We've seen all the US bases in the southern Persian Gulf countries and Jordan as well either badly hit or have folded up completely. The media has been using a term called de-basification. I think that's the first big step in the exit of American hegemony from this region. But the de-basification itself is not enough. There has to be economic delinking as well. And of course, political changes have to happen as well. And this is why I say it may take a couple of years. But the fundamental point that we will get at, where this conflict will end, where the oil and gas will flow freely again, and probably at prices much lower than they used to be in the past when this market was dominated by the petrodollar, which will no longer have its hegemony in a couple of years from now. At that point, we're going to see a very different world and a much better world for the world's masses, including the American people, which have been subjected to gasoline prices of more than $4 per gallon for several months now because of this foolish war that has been launched by their president and by their regime. So I think we are heading towards something positive, but it may take a little more time.
That's the word coming in from Mr. Zaidi. We are heading towards something positive. Hope that happens. Thank you so much, Mr. Zaidi and Mr. Rosh, for joining us today on ET Now. I'm afraid due to paucity of time, we will have to wrap this conversation right now.
Welcome back. You're watching India Tonight with Shibani and myself, Jude Sanant, bringing you all the updates that took place through the day today. Let's shift focus next and take a look at how markets fared for most part of the day. The Nifty, remember, closed below the 24,100 marks. Banks largely lagged while the broader market slipped. IT emerged as the top sectoral gainer, while FMCG and oil and gas stocks also corrected. Max Healthcare and Coal India were the top losers on the Nifty today. My colleague Snehi is here as always with more details from the markets.
Well, yes, yet another subdued day coming in for the market, and this is the 7th straight day where we've seen pressure coming in on the Nifty and Nifty ending in the red. That being said, we've ended at 24,078. At one point of the trading day, we were very close to breaching that 24,000 mark. However, we've not slipped below the 24,000 mark as of yet, and we've managed to hold above that. It's a 77-point cut coming in on the index and 0.3% lower for the Nifty. Slightly elevated cut seen for the Sensex, 0.4% lower. The Nifty Bank, however, saw a little recovery from the day's low and ended absolutely flat. But the pressure on the broader end of the market persisted. You've seen mid-cap index lower by 0.2 and slightly more elevated pressure on the small-cap index. That index was lower by about 0.6%. Now let's tell you what the sectoral move was like, because barring IT, all the other sectors have closed in the red. IT was the only and top sectoral gainer. You had a move of about 0.7% on Nifty IT, despite a CLSA downgrade note coming in on some of the large-cap IT names. It was names like Coforge, HCL Tech, Oracle, Persistent, Wipro, Infosys that kept that index going. On the flip side, the biggest losing index and the steepest cuts we've seen is on Nifty Defense. That was led lower by Astra Micro, Cyan, DLM, BDL, MTAR Tech. This was followed by cuts in energy, media, FMCG, oil and gas, finance, as well as auto and pharma. Talking to you about what the Nifty 500 tilt looked like, you had about 350 stocks in the red and 150 in the green. So quite the tilt coming in towards the declines. So the biggest cuts on Netweb Tech, CESC, Acuitas, Semindia and HEG. And on the flip side, ICICI Pro AMC did very well, about a 6% uptick on that stock. GSK Pharma follow-up trade coming in very nicely. Cairns, RR Kabel, Nippon, Cyient, all of these stocks have done well from the broader end of the market. Another basket to watch out for was the sugar stocks on the news and report-based news that the government could be looking at doing away with that 100% duty on sugar. And on the back of that, you had Dhampur Mills, Sri Renuka, Balrampur, EID Perry, Triveni Engineering, Dalmia Bharat Sugar, all of them were doing well. The city gas distribution companies were doing well on the back of a source-based exclusive story in terms of compensation. So a couple of names, IGL, MGL, all of them were doing well as well. Couple of infra stocks on the back of order wins, some brokerage actions coming in as well. Some stocks were in focus on the back of that, but largely we've ended slightly under pressure when it comes to the index. 24,078 is where we've shut shop.
Now, market regulator SEBI has uncovered an alleged 1,000 crore rupees fraudulent loan scheme and issued an interim order against Dhenu Buildcon Infra Limited and connected entities. Anurag Shah gets us more details on this.
Capital market regulator SEBI has passed an interim order against Dhenu Buildcon as SEBI uncovers 1,000 crore fraudulent loan scheme. So as per the SEBI's order, 1,000 crore unsecured loan was received by Dhenu Buildcon, but actual amount was 25 crore only. And that 25 crore only rotated again and again to show 1,000 crore. Later on, 840 crore of that 1,000 crore debt converted into equity shares. And there was a complex web transaction also found under the SEBI's investigation. The share price of Dhenu Buildcon jumps 200% without any improvement in business, and the market capitalization also rose from 3 crore to around 5,000 crore. So these are the findings of SEBI during the investigation. As SEBI has barred Dhenu Buildcon from, SEBI has prohibited undertaking any corporate action, and 6 notices barred from dealing in Dhenu Buildcon shares, 2 entities barred from buying, selling or dealing in securities also after the SEBI's order.
And staying with more market action, sugar stocks are buzzing as global sugar prices surge and mounting supply concerns. This even as Brazil faces harvest disruptions and Thailand cuts its production forecast. In India, tight inventories and improving festive demand have pushed domestic sugar prices up nearly 20% for the month of August. Avi joins in with the key trends in the sugar market.
As Harsh rightly mentioned, the sugar sector has been buzzing, and we can see that the stocks have rallied in the range of 10 to 15% in the week gone by. That is on account of global supply crisis and constraints and the growing domestic demand. Talking about the US, raw sugar prices have crossed the key mark of 15 cents per pound and have now reached 16 cents per pound. Talking about Brazil, which is the world's largest sugar producer, has been facing adverse weather due to which their harvest season for sugar has been delaying. They've also suspended their bi-weekly production and harvest data for sugar, giving creating very limited visibility on the supply side of sugar. Thailand, in fact, has cut its production estimate to 9.5 metric tons, and the global sugar deficit is now being estimated in the range up to 3.3 metric tons. Talking about the Indian domestic market, we can see that the growing demand for sugarcane, along with higher ethanol production, also using molasses as a part of it, is now leading to growth in the sugar demand. Sugar exports, however, remained restricted until the 30th of September. And even after the restrictions are lifted for exports, we can see very limited exports being done from India with respect to sugar, because we have a lot of domestic demand to meet too. The domestic sugar prices have skyrocketed by almost 20% in the month of August alone. The inventory produced at around 37 rupees per kg now sits at around 47 to 55 rupees per kg, making some huge mega inventory gains for the sugar players in play. We can see that the inventory gain will help companies with better EBITDA margins, strong cash inflows, and of course an earnings upgrade that could come. Talking about the embedded total gains would range in the almost in the range of 500 to 800 crore rupees, and the Q2 to see inventory gains in the range of 100 to almost 250 crore rupees. The top beneficiaries would be Balrampur Chini, Triveni, and Dalmia. There are also reports that suggest the government is planning to cut absolutely the 100% sugar import that is applicable as of now to better make sure the availability of sugarcane in India and to support the growing demand in the domestic market. So all in all, we've seen that the sugar stocks have skyrocketed because of global supply constraints and the growing domestic demand, as it is also used in ethanol production.
Well, with that, sir, it's time for us to slip into a very short break. You don't go anywhere. We'll be right back on India Tonight.